could you tell us or just give us an overview of the DoubleLine Commercial Real Estate Fund and its investment strategy and what makes it different from other real estate funds?
Yeah. So we were the first actively managed fund when we launched in March of 2023. And the concept really is to give investors exposure to the commercial real estate debt market. CMBS is the primary investment product underlying our fund. That's what we are designed to give investors is exposure to the CMBS market. And so invest in our fund, you will get exposure to the CMBS market in an actively managed way. Active management to me is very, very important. Comes down to selecting the securities, comes down to understanding how a loan interplays with how a borrower behaves, and also the timing of the loan being paid off on time. These are all aspects where, from an active manager perspective, that's what you're hiring us to do, is to sift through a vast market of opportunities to find the best investments possible. From an exposure standpoint in itself, I do think, some advisors will look at ways to disintermediate the ag and then rebuild the ag based on their asset allocation models. Our fund, DCRE, that's one option of use case for DCRE is to, if you want heavier exposure to CMBS as opposed to corporates, use DCRE as that sort of vehicle. Another alternative option would be a shorter duration cash plus type of instrument or vehicle. DCRE, again, is another example. If you just look at what we're doing in our fund, what we hold in terms of the high quality nature of the underlying investments and the historical performance, these are ways that, what we've seen investors use our fund for. So, those are two options, but obviously not limited to those two. If there's any questions, happy to, answer them directly.
Well, I do have one more question about the fund, and that is, what guiding philosophy or principle shape your approach to managing the fund?
Yeah, I think, from my seat in terms of philosophy and how we design the fund, capital preservation is paramount. As I kind of talked about, as a debt holder, you only get paid interest and principal. So, as we think about CMBS investments themselves, that really shapes how we do things and how we put together investment. We want to get in a situation where we're buying a bond. We know what's going on in that building based on, even site visits. What is that borrower thinking? How are the tenants doing? We want to be able to answer all these questions. And that's the type of investments, bottoms up sort of investment philosophy that we will embark on. We're not here to give you beta. This is not a momentum type vehicle. This is a value bottoms up sort of a thought process to put together a portfolio that, one, is focus on capital preservation. These are things that I think are very, very important. Yes, the CMBS sector was cheap and it continues to be cheap. That's also a reason for investors to want to come in. But I think over time, what's cheap before may be less cheap now. And, if you stay with us, I can tell you that the experience will also hopefully be pleasant.
All right. Well, this has been a great conversation so far. Lots of really good information for our listeners. So thank you for that. But before we let you go, we do have a few more questions that we like to ask all of our guests here on the Weighing Machine. And the first is, what is currently your favorite investment idea?
My favorite investment idea, self-storage. And unfortunately, it's a commercial real estate centric sort of investment. And I was thinking about this a little bit more. It's just storage properties. Whether you get exposure through equity, self-storage equity REIT or whatnot, or directly direct investment, it just depends on your personal preference. But to me, the premises and logic behind it are, in a stagflation and or a recessionary environment, a storage property should benefit in the long run because a few points. Stagflation, rates are high, growth is low, which implies the barrier to entry for homeownership will likely continue to be challenged, which then means people are forced to go to the rental market or downsize into the rental market, which means that the excess items that you would have when you're downsizing, you need to store it somewhere. So to me, the storage sort of play That's one aspect. In a recessionary environment, again, it's a downsizing sort of theme. You'll probably need to downsize. You could presumably move, but that storage property will likely benefit as well through that sort of environment. So it's somewhat resilient. Only point where it doesn't do well is in a high growth environment where economic expansion and activity is very, very robust. So I think that's to me that's been on my mind recently. Whether for personal investment or whatnot, but that's all
right. Well, Morris, thanks so much for coming on the show. It's been great to chat with you. Before you go, tell us how can our listeners stay in touch and learn more about what you're doing at DoubleLine.
Yeah. So, obviously we have a lot of, DoubleLine content, whether it's white paper and or fun facts on our website at, doubleline.com. There's also, to the extent that there's any specific questions surrounding our funds and or DCRE and or CMBS related questions, there's a contact as well on our website that, people can use to reach out to us. And, I'm sure, we'll try our best to get back to everyone as soon as we can. But I appreciate everyone's time. And Rusty and Robin, thank you for having me. It's been a pleasure over the last hour.
Morris, again, a very compelling discussion, what I think is a very important asset class. I also would argue an underappreciated asset class. I think the one that deserves both strategic and tactical considerations by investors. So thank you for your time today. It was very useful.
Thank you.
All opinions expressed by Rusty Vanman and our podcast guests are solely their own opinions, and they don't reflect the opinion of or endorsement by Orion, its affiliate subsidiaries, and its employees. This podcast is for informational purposes only and should not be relied upon as a basis for legal, tax, and investment decisions. The opinions are based upon information the participants consider reliable.
Wealth management services are offered by Orion Portfolio Solutions, LLC, doing business as Breaker Capital Investments, a registered investment advisor. Orion Portfolio Solutions, LLC is a wholly owned subsidiary of Orion Advisor Solutions, Incorporated.